రిషి ఒక చిన్న పని మీరు రావచ్చు మళ్ళీ లైవ్ జాయిన్ అవ్వాలా నేను కూడా? Okay. Good morning, everyone. Welcome to Sosin IAS Academy. In the last class, we have discussed part 1 of the budget, where we have discussed the important indicators, GDP, inflation. We have discussed fiscal deficit, finance commission, grants, recommendations, and we are discussing the tax proposals. In the first part of the discussion, we have discussed certain tax proposals like there are no change in the income tax slabs, tax holidays and incentives, taxation of share buybacks, and increase in the security transaction tax. So these are important for your prelims exam. Okay, this is where the questions come from. It is not regarding the taxes the UPSC will ask. It is regarding what is share buyback. It is regarding what is securities transaction tax. It is regarding the tax holidays for foreign companies. Why it is important. That will be asked in the examination. Okay. So if you have followed the discussion, we did discuss what is a share buyback. What is share buyback? When you invest in a company, basically you will get a dividend in a year, whether it is quarterly or half yearly or yearly, there will be a dividend for a certain amount of time. Okay. But without dividend, if a company wants to pay you more, because on dividends, governments used to put tax on the dividend. As the company is paying you the return, there will be tax deduction at the source because it's a payment. The dividend is a payment, right? So there will be tax deduction at the source. So many people who invest, they are investing either for dividends or for the returns. Before, that is the mechanism. But people get discouraged because of this tax deduction by the government. Over a period of time, it has become a point for every company to use share buyback as the alternative mechanism. Okay, in order to provide more returns for the people who invested. Because if people get more returns, they try to invest more. There will be more collection of resources. Because collection of resources is a very difficult thing for every company. So if a company says that we'll pay you more in the form of buyback of the shares, more number of times in a particular year or a set of time frame, people try to invest more in that company. So it is one kind of attraction for the investor to invest in a company where there will be option of buyback of the shares before there is no tax on it. It is actually making government to get the less tax in the share market, okay, in the primary market. So basically that is the reason why government have introduced that even on the share buyback. And mostly where this buyback is happening, most of the investment is coming from the promoters. They invest more. Promoters who are promoting the company, they invest more, they try to get the dividend. Now, because of the share buybacks, they are getting more returns. So for them, there will be additional buyback tax. Suppose if they are the ones, if the promoters are buying back, if the company is buying back the shares from the promoters, they need to pay additional tax in order to buy the share. Who is buying the share here? One second. Promoters? Yes, initially they are the ones who are buying the shares of the company. Shares of the company are bought by promoters or investors. Okay, initially, right? After a period of time, company announces buyback. Company will buy back the shares which it sold initially. Initially, in the first stage when it sold, it used to get money from the promoters or investors. Money is going to the company. Now, after a certain period of time, when a company needs the money back and it feels that there is no need for extra money, what it does is it will float buyback, where there will be more return for the investor or promoter. Before there is no tax on this buyback. Buyback means what? Company will take back the shares and company will give money to the investors or promoters who invested in the shares of that particular company. Okay, so there will be more returns for the people who sold the shares. Who are buying the shares back? Company is buying the share. So on the share buybacks also, the government will put the tax. What this company must do? Company will deduct some money even on the share buybacks and give the capital gains, whatever the investor gained, to the investor after cutting the tax. Tax deduction at the source. Remember, there is a difference between tax deduction at the source and tax collection at the source. We will discuss. That is there in the next discussion. Did you understand share buyback? Okay. Then there is security transaction tax. So you don't need to remember this percentages. We have already discussed this, but I'm again repeating this because this is where this is somewhat tricky. Normal investors invest in a small funds. They don't have huge assets or crores of money. But who are the ones that have crores of the money? The wealthy individuals. The big companies, they have extra money which is not put to use. So that is where the hedge funds or the brokers or the intermediary traders or institutions come in. What these institutions try to do, like asset management institutions, what they try to do, like hedge funds, these are called as hedge funds. They try to take the money which is not in the use, they try to invest in the market, in the secondary market. How they will try to do it is not to get the slow returns. If you are investing, you will get the slow returns. But what they try to do is they try to minimize the risk, and whichever point of time, whether it is profit making or loss making, they try to somehow recover the money what they have invested. So in this, there are certain kind of instruments. They don't invest for a longer period of time. If they invest for a longer period of time, investor can get either profit or loss. But here in this case, hedge funds, even in the time of loss or even at the time of the profit, hedge funds try to gamble. it is like a very volatile trade market. They try to speculate more. Tomorrow the company is going to be in the loss. So because it is going to be in the loss, let me get some profit. So what I try to do at a future date, even before the loss happening, I will try to sell certain amount of shares even before that happen. So there is some amount of speculation in it, whether it is at the point of time of loss or point of time of profit for the company. Hedge funds try to make a quick buck. Okay, it is not a long term investment. Generally in the hedge funds, people who have lot of money, they come into picture. But because the secondary market is growing in our economy, lot of small investors also try to make profits based on this kind of speculation. That is where they use, rather than they using the shares, they try to use certain derivatives, which is called as derivative market. Okay, so what are the derivatives? The derivatives are futures and options. The derivatives are futures and options. Okay, so you need to understand there is a difference between this futures and options. What is a future? An investor trying to bet on the market at a future date. Either he will sell a particular share or buy a particular share at a future date. Okay, he will sign this even before the future date. He will sign that he will sell the share or buy the share at a future date. So there is a fixed commitment of buying a share or selling a share even before a particular date of the share price falling or share price rising. So at this particular date, if he gets the price rise and if he is selling, he might get some loss. If he is buying at a future date and the share price is rising, he'll get a profit. So it is based on speculation what can happen tomorrow. But in the future, he needs to compulsory buy if he is exercising that option of future. There is no choice for him. There is no choice for him to quit in between. If he is signing today that at a future date I am going to buy this many shares, he need to buy the shares. By tomorrow, by the next day, the market can go rise or can go down. So there is speculation here, yes or no? But the thing is, he needs to buy it, whether it is a loss, whether it is at the profit. What is, if a person is not knowing exactly what can happen and he is investing, what does it mean? There is lot of speculation. Share market itself is a speculation. If you are investing in a particular company, this involves much more speculation, right? Then options. So what is the difference? Future means there is no choice of quitting. There is no choice for them not to exercise a particular option after signing it. Understood? Then options means what? In the option, there is a call option, there is a put option. Even in the agricultural market, you might have studied it. Call option, put option. If you are calling, it means you are trying to buy. If you are exercising put option, means you are trying to sell a particular share. Here, the investor, what he tries to do is, he will say at a future date, I will try to buy some amount of shares, like X amount of shares at a particular price. Okay, he have an option here and he is exercising which option? Buy means he is exercising call option. So he have a choice to exercise call option, and in order to do that, he'll pay some fixed amount of price. He'll pay some price and he will say that tomorrow there is a chance for me to buy. So I am exercising the call option now. For doing that, he'll pay a fixed price for that. Okay. And for put option, he wants to sell. he wants to sell it off. So he exercises put option, and he will also pay a fixed price for this. If he have subscribed to the options, he'll pay the fixed price. But at that particular date, he thought this will make me at a huge loss. So what he will do, he will not initiate the call. It means he paid the price, but final call he'll not take. It means there is no compulsion to buy or compulsion to sell for him. Or he can do other thing also. Instead of buying, he can sell also. Instead of selling, he can buy also. So it means there is an option for him to do opposite, or to not do anything. It means he can exercise his option to validate this particular agreement or not validate a particular agreement. Future means what? If you are investing in the futures, if you are exercising the future options, you need to follow the agreement. In the options market, you don't need to follow, but you will pay the fixed price. There is speculation in this also. So because right now what is happening, everyone is doing that, not just larger investors. And because of this, speculation is going on very much. And as the speculation, rumors will be going on, it can lead to potential crashes of a particular company's shares, excessive rise of the value of a share of a particular company, which is very indirect on a mouth talk like that. There can be manipulation also, because lot of small investors are investing. Lot of people are trying to come and study. But for the serious investors who really put and exercise the futures and all this, who have really money, they can't do that. If many students are coming who are creating disturbance, it is not creating any purpose, right? For the sincere students, it is just like that. So in order to discourage that, government have increased the taxes on it. That is what is securities transaction tax. So as a person is investing on one share, whether it is a future or whether it is option, on each share there will be tax. Before it used to be 0.10. Why it is 0? On every share it is. You might think it is a very less amount, but a person will not just buy one share. They'll buy 100, or they'll buy much more than that. So over a large chunk, it is a huge amount of money. When the tax increased, they will face that they need to pay some thousands of money. So it is like a discouragement for the smaller investors to not involve in this kind of speculation derivative market, rather invest in some other shares without speculation, based on real data, real economic data, to choose the investment options based on wise decisions rather than speculation. Okay, this is what is securities transaction tax. What is transaction? On transaction, buying and selling, there is a tax that is levied by the government, and on which, that is securities. This is what securities are, shares. Okay, understood? So this is derivative market, futures and options. Only on the futures and options this tax has increased in order to discourage normal investors. Okay, understood? Had any doubt in this? Then we have restrictions on deductions for mutual fund income. So this is one more proposal, tax proposal. These tax proposals will come into picture after the finance bill has been passed by the parliament. Okay, so no deduction for interest expenses incurred for earning dividend or mutual fund income. It means government is trying to make people invest more in the mutual fund income. Earlier allowed up to 20% deduction, not withdrawn. So there is no interest on earning dividend from the mutual funds. What is mutual fund? When you invest in a particular mutual fund, whether it is a long term or short term, the mutual fund will invest. You invest in the mutual fund, you invest in an entity, but on behalf of you, mutual fund will diversify your portfolio and invest in the multiple companies, and it will give you a decent return. It will not be like a share market where you will try to get more number of profit and take more risk. There will be less risk in the mutual fund. Okay, understood. But you will get some guaranteed return over a period of time. One day it can be a loss, but over a period of time there can be a small amount of growth for your money, and generally in the mutual funds they get more profit than that of fixed deposits in the bank. So your money will be put to use, and you will also increase your value of the money in the mutual funds. Then changes in the minimum alternate tax, this is more important. MAT reduced from 15 to 14%. MAT credit accumulation have been discounted. What is MAT? Minimum alternative tax. So basically, as a company is growing, company need to pay the tax. Company has, let us say a company or industry or a factory had took money from the people. After paying dividends for the investors, company will book some profits. On the profit and loss making account of a company, there will be how much revenue they have got. So on revenue, every company, be it an individual, household or any factory, they need to pay certain income tax, right? But according to the income tax, there will be so many deductions, there will be so many exemptions for different kind of companies. Suppose if a company is making revenue of 100 crore, on that company need to pay income tax of, let us say, 20 crore, which is less. And moreover, company will try to find some or the other loopholes or some or the other exemptions, and they'll pay tax at a much later date. And moreover, they need to get returns after the goods that are sold in the market. So there are a lot of ifs and buts. So companies will not pay the tax, which is income tax. Right now, in a particular year, what they try to do is, rather than paying income tax, because they don't know how much goods will be sold over a period of time. So for the purpose of advance payment, what they try to do is, they try to pay the minimum tax. The minimum tax will be fixed by the government. Sometimes what will happen is, the companies will end up paying more tax than that of the income tax, which is levied for every industries. For micro industry, there will be some tax on, so let us say if they are paying, if they are getting 100 crore, 100 crore is not the income that micro will get. Let us say they are getting 1 crore profit. In that they need to pay certain money, let us say 2 lakhs. That is a very small amount of money. But they will do that payment only after their goods are sold. There is a gap between manufacturing of goods and the point of sale of the goods. They don't know how much profit they got in this financial year. So rather than delaying the tax, what happens if they delay the tax? There will be loss for the government because tax is not coming right now. So in order to avoid these kind of discrepancies, the companies try to pay the minimum amount of tax. Suppose if on the real value at a future date, they are only selling certain amount of goods, but not huge. And they have not made 100 crore or 10 crore. They made only 5 crore. It means their profits are less. Their original income is less. But earlier, they paid minimum alternative tax, that is 15%. It means they paid huge in advance. What will happen to that extra money? They can pay their original documents, how much they have sold, and they can say, I have paid more earlier in the form of minimum alternative tax. My original income tax is only this much. So what will happen? The extra tax which they have paid before, that will get carried on to the next year. It means in the next year, they don't need to pay much more. They can utilize this amount of money which they paid extra, which is called as minimum alternate tax. Why this had been brought in by the government? It is to make all the companies pay some or the other amount of tax, not to make companies do tax evasion. That is why this provision of minimum alternate tax have been into the place. Understood? So at least minimum tax, so companies will pay and the government will get tax every year. Whatever the extra tax, suppose if they have paid some extra tax, tomorrow in the next year they'll pay somewhat less tax because already there is credit of tax. Now what the government have done is it reduced the tax. Minimum alternative tax is from 15 to 14%. It means you don't need to pay higher tax even in the minimum alternate tax also. Then credit accumulation discounted from April 1st, 2026. It means that for this year, whatever extra credits, whatever extra taxes the companies paid before, they can utilize only up till this year. It means they can't use this credit accumulation thing over next years. It means there is no credit accumulation from now on. In this year, only the companies which have accumulated extra credits before or extra taxes which they have paid before, they can utilize it. It means, suppose let us say a company have paid minimum alternative tax of, let us say 5 crore it paid, okay, but it has to originally pay only 3 crore based on the original income what it had got before. So extra, how much it had paid? 2 crore it had paid, okay, and this 2 crore they wanted to utilize for 2026. But what government have done? These companies can only use 25% of 2 crore. It means in this year, in this financial year, if a company need to pay again 3 crore of tax, only 25% of 2 crore will be utilized in this. Rest of the money need to be paid by the company on its own. This rest of the entire 2 crore will not be used, only 25% will be used, and this kind of credit accumulation for next years or the future years or utilizing it will not be there from now on. It will be discontinued. Companies need to pay their either income tax or minimum alternative tax of 14%. There will not be extra tax that can be carried on to the next years. Either you pay income tax or either you pay minimum alternate tax. Even if you pay extra, if you want to choose MAT because you think that MAT will be lower for me, I feel that my income tax might be huge because I might get less money, so let me pay MAT. If a company feels let me pay MAT, it will pay MAT. Suppose at the end of the financial year, company realized that my MAT is huge. I would have rather paid income tax. That is a decision of a company. It cannot change it, or it can't use extra money it has paid for the next financial years. It need to either choose either income tax or MAT. Did you understand? Suppose it has paid more money in the form of MAT. Before, what used to happen? That extra money can be paid for next income tax year, can be utilized for next income tax year. Now that cannot happen. If you are paying, it means you paid only for that year. Extra paid also, that will not be credited for the further year. It might be loss for you, but you have to choose. The company has to choose either income tax or minimum alternative tax. In this year it is allowed because you might have credited some amount of money till now. You might have had 5 crores you paid extra for the previous years. In this year, only 25% you can utilize from the credit. Out of 5 crore, 25% you can use it for this year tax. Rest of the money will go. And from now, this scheme will not be continued. But what you need to understand, this discontinuation or non-continuation, this is all not necessary. For you, what you need to understand is minimum alternative tax is levied on the companies where at least the companies are allowed to pay minimum tax in order to avoid tax evasion. Okay? In order to make companies pay tax in advance for a particular year. Okay, and there will be lot of discrepancies in Income Tax Act. Lot of people will try to find exemptions and they don't end up paying any tax for the government. In order to make at least a company pay some or the other tax, government have bought minimum alternative tax. These details will not be asked in the examination. What you need to know, what is MAT, that is what you need to know. Understood? Did you get the difference between Income Tax Act and minimum alternative tax? It is just explanation. Question will not be asked in this. They'll ask they might ask what is the difference between income tax and minimum alternative tax. If you understood this concept, that is good. Well, they don't ask you details, 25%, 10%, 0.1%. No. You know what is future, what is option, difference between them. In options, what you need to know, there will be call option, there will be put option. This basic concept you remember. If you want to remember facts, just remember what is a fiscal deficit, 4.3, 4.4, debt to GDP ratio, GDP growth, what is inflation. This basic indicators, facts you remember, that's all. Don't need to go into the details. How? Income tax. Corporate tax? See, most of the different types of companies will be there. Companies which have huge amount of turnover, they might pay corporate tax, but that does not mean all companies will pay. There are small micro industries that are there. Everything is not a company. There will be different companies who pay income tax. They are not huge corporations to pay corporation tax. This is not paid by all huge and large companies. Some small companies or individual businesses will be there. That will not come, individual businesses will not come under corporations, right? So they pay Income Tax Act. For example, in tier 2, tier 3 cities, individual businesses will be there. They can't pay corporation tax for them. This is the thing. They need to pay this. Okay, individual businesses, I mean, not big corporations. This is a very valid doubt. Okay, small business, your father is having some small business. He need to pay this tax, Income Tax Act. That will not come under corporation tax. Okay, that is the difference. Foreign Asset Disclosure Scheme, NRIs, for non-resident Indians who come to India or who might be living in the other countries for a shorter amount of time. They might have brought some assets. They need to disclose that assets and they need to pay tax. If there is double taxation avoidance agreement, they can pay either tax in the other country or this country. But they need to disclose even the smallest accounts. Suppose they have extra bank account from the foreign entity bank. Whatever money they are getting, whatever the income they are getting, they need to disclose it. Many of the times, rationally, sometimes by mistake, they might not disclose. So for them, there is a provision for disclosure. They need to disclose. Otherwise, if they don't disclose, there will be extra penalties on them. So in order to avoid those kind of extra punishments, this disclosure window has come into picture, where the time-bound scheme for small taxpayers. It means who are working there, the students who are studying there or working there for temporary purpose, they need to pay the tax. Suppose if they bought some asset, some car they bought, or some house they bought in the foreign place, they need to pay the tax. Or they are sending some remittances, or they are bringing some money, like in the form of dollar, they need to disclose that and they need to pay the tax. Okay. So offers immunity from penalty and prosecution. So there will be no extra prosecution for the payment delays. Many of the times people don't realize. So this is a window for them to actually do the small payments instead of attracting huge penalties. Okay. Then relaxation for NRIs. So many times NRIs who have lot of knowledge, they come to India in order to help Indian government for the space, telecom, semiconductors. They might work as scientists. but they might have lot of income from other global companies also. They might have invested in some other companies, but they are the citizens of India, but they are not residing here. That's the thing, right? Suppose if they are staying in India for 5 or 6 years and they are helping us, or they are setting up the company here and they are benefiting India. But if they are taxed huge income based on the assets what they have, or based on the income what they are getting from other countries, because they might have invested there, or they are doing some other service in some other service for other global companies which are residing in other countries. So you can't tax them at a very higher rate. It will discourage them to come to India and to provide their services. What we are talking about AI, we are talking about semiconductor chips. We need to have that knowledge. If we see, many of the foreign entities, many of the other countries are moving forward in the race, like technology race, semiconductors, and who are helping these people out? Indians are the ones, and there's a lot of brain drain from India. And if they are very skilled and knowledgeable, for them, if they are providing services within India, for whatever the assets they have that is coming from other countries, that will not be taxed, in order to make them encouraged to look towards India also, not just get carried away. Will give you certain benefits if you provide some valuable insights to India, if you try to invest more into the Indian market in the form of FDI, if they are purchasing, if they are sending some services to electronics, chips, semiconductors, for them there will be less taxes. See, 5-year income tax exemption for supplying capital goods to electronic manufacturers. If they are having a company and they are selling some intermediary goods to the electronic manufacturing in India, for them they need to not pay any tax. Exemption of global income for certain expert non-residents. Expert non-residents means who have knowledge in technology, who want to come rather than staying there helping that companies. Come here, give your expertise, but we will not tax you. Because they are non-resident Indians, we are taxing. In the GNI concept, gross national income concept, there is net taxable income. It means we don't, the non-residents or the foreigners who are generating income here will take that money, and we will also deduct the money that is generated by Indians abroad. If you see the difference between GDP and GNP or GNI. But that is a different concept. Here, non-residents coming to India helping us, for them there will be less taxes or no taxes. Okay. Wider MAT exemptions for non-residents also. Okay. If they are investing, or if they have subsidiaries within India, for them also there will be minimum alternate tax exemptions. They might have multiple companies. Okay. They might invest in India. Rationalization of penalty and prosecution. This we are talking, it's like we'll deduct the taxes, encourage the growth, encourage the businesses. We'll see there are a lot of criminalization laws within IT. If they don't pay tax, they need to, they are punishable. They have huge fines in order to pay. All this will reduce. There will be no imprisonment. There might be extra penalty for you. So decriminalization of tax laws, in order to encourage businesses. That's the thing. It means deregulation. Deregulation is the very important thing from past budgets also, this budget also. There will be deregulation. There will be more importance given to self-reliance, especially in the critical sectors. In critical sectors like rare earth minerals or metals, if the companies are set up in semiconductors, nuclear energy, biomedical, pharma, for them there will be more tax exemptions, because we are importing those goods from other countries, especially China and Taiwan, especially chips, semiconductor chips, rare earth minerals. We will discuss the differences between all. Tax collected at the source. So let me tell you the difference between tax collected at the source and tax deduction at the source. TDS is levied on the income. Suppose I am your employer, you are my employees, I need to pay you salary. I will deduct some tax. I am the source of payment. I am deducting some tax and giving the rest of the money for you in order to consumption. So what is happening here? Tax deduction at the source. From where you are getting money? From me. So basically TDS is something where on the income TDS is levied. On the payable income TDS is levied. And it happens across employers, employees in organization. TDS is for the working professionals. Let us remember it like that. TCS is tax collection at the source. Suppose you want to buy something. TCS happens at the point of buying or selling something. At sales point it happens. If you want to buy something, I am your seller. What I will do? I will collect extra tax from you because I need to pay tax because I am selling something. But who will end up paying the tax? It is consumer who will end up paying. Suppose you are buying chocolates from me. I need to pay some extra tax for the government because I am selling. On whom I will levy that burden? At the end, on the person who is buying from me, right? You are the buyer. So buyer will pay extra tax. So tax collection at the source. I am selling something at the source and on you the tax is levied. So basically TDS is on the income. TCS is levied based on the sale. Okay, on the consumption sale. That is the difference. So that has been reduced. And TCS on education, medical remittances. So some people who want to study abroad, people who want to go abroad for some medical expenses because they need to convert the money. They are changing their money into dollars. At that point of time, the tax will be deducted here itself while converting that money before you going to abroad itself. So after going, you can't pay the tax. We don't know. So basically what government is trying to do is how money is circulating with the TDS, this on remittances, all this. If you are converting Indian currency into some dollars and if you are taking abroad, basically what is happening with that money? Suppose you might be saying that for the government, you might be saying that you are very poor person, you are not paying income tax, but you are going abroad by selling some property or putting some property, getting some loan. But that does not, that means what? There is some discrepancy. You are quoting something in India and you are doing abroad, you are purchasing a lot, you are taking a lot of money. So all these, by paying this kind of TDS on remittances, etc., government will track exactly where you got that money, what you are doing that with that money. So it is basically to track the money that flow from India to abroad, not to encourage the things like money laundering, smuggling. These kind of TDS is bought on people who go abroad also. Okay. Initially you might pay more, but government will return that once you come or after at the end of the financial year. But initially what on the face value what government is trying to do is it is trying to tax you less. So in order to encourage you, encourage education elsewhere in the country, like that. It's just normal policy. Sometimes government might increase the tax, might decrease the tax. Today government is increasing tax on security transaction. Tomorrow it might feel that there is some laws that have happened, let me reduce the tax. So it is up to the government. So TCS on overseas tour package, it is encouraging the tourism also for other countries like that. So on tour packages also there is reduction. So you don't need to focus on this, just focus what is TCS, what is TDS, what is MAT, that's all. Understood? These are the basic tax proposal things. Now we are going to discuss what is incentives for agriculture, infrastructure, services, industry. We discussed most of the main part. We discussed 15th Finance Commission, 16th Finance Commission recommendations, 41%. We discussed in 16th Finance Commission what happened, what are the new criteria that are introduced.
Same 41%.
No, income criteria. There is some certain criteria on which the Finance Commission give the grants for the states, which is contribution to the GDP is the new set of criteria introduced. Suppose if a state is contributing more, it will get more money within 41%, which is called as horizontal distribution. That you need to remember. Government has, 16th Finance Commission recommended that there will be no deficit grants. The grants in aid will be given only on the basis of, only for local bodies, based on basic constitution and their performance. The performance criteria is also less, that is only 20%. Okay, and government have removed what? Deficit in the deficit grants, sector wise, state specific grants, these were removed. Okay, and there is some changes also. For population, the criteria has decreased, income distance criteria has decreased, 40 to 41. You don't need to remember all those. You just remember the basic things. Okay, we have discussed in the last class. Please see the last video if you have doubts for that. FRBM targets, you remember? Right now, what is the fiscal deficit? 4.4. In this coming financial year 26 to 27, what is the target? 4.3. What is the debt to GDP ratio? Public debt to GDP. What is the difference between both? Fiscal deficit, remember, is for this year. This year, 53 lakh crore is the expenditure. How much revenue government is getting? Somewhere around 35 or 33. What is the extra money that the government need to do? It needs to borrow. Fiscal deficit is talking about the present year. Present year in the GDP, how much deficit we have, how much debt we will take for the present year's GDP. That percentage is called as fiscal deficit. We calculate every year as a percentage of GDP. Public debt means how much debt we have in total over a period of time, over this many years. It might be several lakh crores, not just 17 lakh. 17 lakh will be just for this year. Okay, that public debt to GDP, it means total debt the government is carrying on its shoulders over a period of time, over many years since independence. That is what public debt to GDP, and including interest payments. Government might be paying interest that it had taken in 2011 also. All that included, how much it is. Right now, what is the percentage? It is the 50, more than 55. What we are trying to do, according to the 16th Finance Commission and the budget, we wanted to reduce it by 50 plus or minus 1 by at least 2030. We can't go that much below because we still have lot of expenditure to do, and we know that we are not exporting, especially huge manufacturing exports, because that is where a lot of income will get generated. Services sector is generating and it is exporting, but there will be some bandwidth also, because especially technology is coming, AI is coming, that can disrupt industries, that can disrupt services sector also. Right now, we are focusing on manufacturing, infrastructure. Even our budget is focusing towards allocation in transport sector. That is the highest allocation that we are seeing in the transport sector. Transport is what? Logistics. Logistics is part of infrastructure. It is part of manufacturing in order to boost GDP. Understood? Got it? So basically, on which sector the government is allocating? Transport, then afterwards defense, education, energy. In the last class we did discuss, see that indicators. That is where the questions will come. Okay, so we have already discussed this PDF will be given to you in the under the video. Just go through it. We did discuss this. Yes, so we did discuss that in the first class itself there are 3 duties for the government to fulfill. That is first kartavya, second kartavya, third kartavya, which is like the government is trying to do long-term planning, especially in the volatile world. This is not for the short term, just giving you some Diwali kind of gifts for this particular year and be on the newspapers. This is not that kind of budget that we are seeing in this present year. It is hugely concentrated on increasing income from the manufacturing sector, creating jobs. It is hugely concentrated on creation of self-reliance, using demographic dividend in a proper way. Otherwise, there will be loss for us. Okay, so especially in which sectors we are not self-reliant? AI, we are not self-reliant. We are importing rare earth metals. We need to do semiconductors. We are importing. Future is technology. Every business requires computers, these technology related things. So if we are dependent on those other countries, there will be less reliance for us. There will be national security threat also. So basically, we are trying to say that there should be more self-reliance, building resilience to volatile global dynamics, enhancing productivity and competitiveness, and thereby sustaining economic growth. Whatever I have told you, like there is Goldilocks moment right now. What is Goldilocks moment? GDP growth is stable plus low inflation is there, less than 2%. What should be the inflation? 4 plus or minus 2 according to the Monetary Policy Committee. So low inflation is very plus point for India, and we are moreover the consumption based economy, which means generally in the consumption based economy, if there is demand and supply mismatch, there is going to be inflation. Growth, whenever there is GDP growth, there will be inflation. Growth and inflation are not two opposite things. One decrease, one increase. No, that does not happen like that. Both will increase. But what we are trying to do is inflation need to be moderate. That is what the duty of Monetary Policy Committee is, to moderate things which can harm in the long run. But right now, even before MPC coming to picture, there is low inflation, and at the same time GDP growth is huge. What we need to do here, sustain this growth over a period of time, reduce unemployment. Inflation anyhow it is less. Why not use this moment in order to create better systems? What are better systems? Utilizing people, providing skill for them. And right now what we are seeing, there is more taxes from the US, where we are trying to export more to certain economies like US. We want to diversify more. We don't want to rely on US because it is imposing how much tariffs? 50%. Now again there is a bill that is put in the US Senate, that is 500% tariff they wanted to. It is like threatening us. So we want to diversify. That is why we have signed what? Free trade agreements. Did we sign or not? With whom we have signed these free trade agreements? EU, UK, Oman, New Zealand, we have signed. In many countries we have signed. Why to do all this? In order to diversify the markets, in order to encourage the exports, get the profits, and reduce the balance of payments deficit. And right now, we didn't discuss this in the last class. How much reserves we have, forex reserves? 700 billion we have, which will sustain us for the 11 months, even without imports. But we need to diversify. Oil imports, we cannot do anything. What we can do is substitute other imports and provide more exports. And where these exports need to come from? Manufacturing sector. Services exports play a huge role. Services sector growth is good. Services sector is growing at 54%, and its gross value added growth itself is 60% in the total GDP growth in a particular year. It is growing at a faster rate. But what has employment elasticity? What is employment elasticity? This is a concept again. Employment elasticity. Every sector has certain bandwidth to employ people. Agriculture has a limited one because a lot of people are moving away from the land towards other sectors, and it is more frictional, seasonal, right? It is more seasonal, and there is lot of underemployment also. Wages is not paid that much in the agriculture sector, and there are a lot of problems within agriculture sector. People don't get loans. Women discrimination is there, though they don't own the land, but women participation is huge. These kind of things were there. Services sector, it is lot of people who are blue collared, educated. Manufacturing sector is having lot of bandwidth because manufacturing pertains to lot of different sectors. Manufacturing of goods which are there, manufacturing of laptop which is used in the services sector itself is a manufacturing. It's a hard job. It is a blue collar job, right? It's not white collar job as a services sector. It has lot of potential to create jobs, and there should be quality of jobs. when there is lot of people which are there, who are there in India, lot of demographic dividend, young population, if we can provide jobs, where we can provide is manufacturing sector. That we need to remember. Okay, and this is where exports will go. This is from where exports will grow. This is where the supply chains will form. Lot of manufacturing exports which we are doing is basically we are importing some goods from China, someone from Australia, we are trying to fix it, do assembly, and we are trying to sell. That will not create value. Even if you see in the free trade agreement of European Union, what European Union is telling, we will allow goods from India with zero tax, but they need to be manufactured in India. It is not just, you will say that I will assemble some good and I will send to Europe and there will be zero tax. Then what will happen? Lot of other countries will try to send to India. From India, it will go to Europe. That is one kind of tax evasion that happens. Yes or no? So basically, employment elasticity is huge. Lot of labor, uneducated or not who don't have technical skills, they can be employed in the manufacturing sector. And lot of our GDP in the manufacturing sector is coming from whom? MSMEs. MSMEs play more than 92% of contribution to manufacturing sector, right? And especially this manufacturing sector is either capital intensive or labor intensive. So if we try to promote more labor intensive sectors, what will happen? There will be less unemployment problem for the people rather than capital intensive industries. So what will happen? Employment will get sorted out. There will be more contribution of GDP from the manufacturing sector, because manufacturing have lot of employment elasticity, and from the last 70 years we did not use it properly and we want to use it. Understood? Every budget we are telling the same thing. There is missing middle, that is manufacturing. We will focus on this, especially labor intensive and especially textile sector. It is huge labor intensive, and more over 93% of goods as exports go to US, that is textile exports. And because tariffs, the textile exports are hard hit. At the present moment, if the government wanted to solve something, that is with respect to textile sectors, boosting them not to get hard hit by the US tariffs. So supply chain diversion is happening, and more focus is given to labor intensive textile sector in order to protect them. Because of exports are not going, competition is rising because of tariff. We will try to look out for other consumers, and we will try to give more money and more tax exemptions, more textile parks the government is going to set up, more employment will happen, and more exports thereby with free trade agreements. This is the idea of the government. Understood? So accelerating growth by focusing on infrastructure and manufacturing sector, fulfilling aspirations of all people, inclusive growth, making them part of the growth. Vision of Sabka Saath and Sabka Vikas. It means ensuring every family, community, region. It is basically talking about inclusive growth. It means growth should not come from only few sectors like services. Growth need to be coming from all the sectors, from all the people, and from all the regions. This is the idea of Vikasit Bharat 2047, developed India. So this is what the three duties of government is. So government is focusing basically on resilient financial sector. Our financial sector need to be resilient. So there is focus on this sector. We'll see some schemes. Then focusing on structural reforms like GST, all that have happened already. Mobilizing savings, allocating capital efficiently, and managing risks. This is also one idea. Government is not just focusing on particular, in all sector, mobilizing of resources. Government will do. Government will identify which sectors need support, which has lot of potential for the growth, which has lot of potential for employment. It is not just merely allocation to all ministries. What is a priority based allocation? Where we can get more growth. This is outcome based budgeting government is trying to do. Then force multipliers for better governance. It's also focusing on better governance. We will see that. Okay. So focus on cutting edge technologies. Biopharma mission is there. Semiconductor mission is there. We'll discuss those. Having this in the idea. Then the first one in the manufacturing sector, this is more important here. Equity support. We are discussing manufacturing sector incentives of government. Okay. What government will try to do? Encourage MSMEs. MSMEs, the perennial problem is lack of capital. Lack of assets in order to show the banks and get the loan. So there should be a lot of working capital. What government will try to do? Government will try to create a fund or institution under it, like NABARD. So this will be some kind of institution which will act as a daughter fund. Daughter fund means government directly don't credit money into MSMEs. It will create a fund in between which will try to devolve funds to the MSMEs. Dedicated 10,000 crore SMEs, small and micro enterprises growth fund. Top up the self-reliant fund with there is already a fund for this enterprises. That is called as self-reliant India fund. In that there will be extra 2,000 crore. It will create a new institution, and that will fund small and micro enterprises. Okay, they try to provide loans, give working capital. Okay, this is what equity support is. See, and moreover, equity support means government will invest in that enterprises. Whatever the returns these entities generate, government will take profit. It will not give as a loan. It will give as a equity. At the end, it will take profits rather than recollection of debt or interest. It will not work like a bank. It will act like a equity support. See, big corporations can go to market for getting the loans. But what happens to these enterprises? They don't get money. They need to take bank loans. They need to give interest for the bank loans. Rather, government will try to act as a partner in the growth for these enterprises by creating this equity support. And for that, what it will use? It will use one institution. It will create one institution which is called as daughter funds. We generally say it as daughter funds. Okay. Then liquidity support with trade receivables e-discounting system. This is more important. I will explain you in a very crisp way. Please focus on this. Let us say there is enterprises, micro, medium, small enterprises, and there will be corporations. These corporations are whom? Let us say the PSUs, public sector units, who are buying the goods from the MSMEs. MSMEs get the money, sell the goods for the PSUs. PSUs will say, tomorrow I am going to take this much amounts of goods, whether it can be manufacturing goods, any kind of goods that PSUs requires as a raw material, let us say. Okay, public sector enterprises or private enterprises also can come into picture here. Okay, now the goods will go to the corporations, but they don't pay the money. Because from corporation side, they need to use these goods and they need to make the final goods. They need to sell the final goods. That is when the money will come, right? It means they don't pay the money very quickly after selling the goods to the MSMEs. MSMEs are selling intermediary goods to the corporations. Corporations delay the payments because they need to execute the selling of final goods. So there is capital that is struck for whom? MSMEs. Which capital? That is working capital. So what will come here is they use one platform. There are platforms like MX11, RXIL. There are 3 different kinds of platforms which are recognized by the government. What they will do is they will provide their documents. I am so and so MSME. I have a document or invoice. I sold this many amounts of goods to the particular PSU. PSU also will approve it. Yes, I took this many goods from the particular MSME. So it means there are 2 documents which is verifying the transaction. But using these documents, there will be other entity called as banks that will come to the platform. What banks will say? Yes, we recognize these are the valid transactions from both the entities by using these papers. Because what is this paper? This paper is basically telling that I need to corporate is owing certain amount of money at a future date for the MSME. It means it is saying that there is a guarantee of money that is coming from the particular PSU. PSU is what? Basically a recognized government entity. It will not bail out, right? And there will be private also. Don't just think it consists of only PSUs. There will be private entities also. Banks will give, by using these documents, bank will provide so and so loan to the MSME. Understood? And there will be multiple banks. There will be SBI, there will be HDFC. They will quote at this particular interest rate, I'll give this much amount of loan to you, you are eligible. And different banks will quote the bids for the MSME. MSME can exercise option in which bank it can take the loan if it requires. Understood? And suppose instead of PSU, there is some private entity. Banks also does not recognize that private entity, but there is some documents. What banks will say, okay, it seems somewhat tricky. So what I will do, I will increase the interest payment. Some banks can give low interest payment. MSME will choose whether I can go for this or I can't go for this. Past transactions also will be seen. So the idea is trade receivable e-discounting system based on invoices that these companies generate and they can upload on the platform. The transactions of money as loans is happening on the electronic platform. There are 3 different electronic platforms where MSMEs showing the proof which is authenticated by the corporation, which can be PSU also. Before what used to, from 2004 it is there. And it is formed by the RBI. This system, trade receivable e-discounting system, is formed by the RBI under payment settlement under the in 2004 under Payment Settlements Act. It has been formed and it is operated. But till now what used to happen is it is not mandatory for all corporations to register or all CPSEs to register. Companies can exercise this option. MSMEs can register and they can try to take the loan. It is some kind of added advantage. There is no compulsion for corporations to do that. There is no compulsion for MSMEs to register. But what government is trying to do is, because you have this problem, I want sustained growth, what I will try to do is, I can't force private corporations like suppose Tata. Tata will also buy the goods from MSMEs. I can't pressurize Tata to be part of this platform. What I can do is, I'll make all my enterprises. What are the enterprises that government has? Public sector enterprises. All central CPSCs, public sector enterprises need to register now. It means there is compulsion. Before there is no compulsion for all PSCs to register. In this act, all PSCs must register if they are especially buying from MSMEs. Private entities also can register. They can do benefit for the MSMEs. Understood? So banks will give loan by taking this as the collateral rather than taking some own asset as a collateral. Understood? And moreover, government wanted to build on it. Not just this. This is a basic idea. Sorry, this is what exactly it happens. What government wanted to try to do is introduce a credit guarantee support mechanism through invoice discounting on trade platform. Credit guarantee support mechanism. It wanted to say that there is one more thing under this platform, that is credit guarantee support mechanism. Using only this, it is one optional thing, but only using this, all loans for the MSME banks can give. It means government wanted to utilize it fully and to develop it further. Okay, now it means government wanted to use it as a sole option of MSMEs getting the loans rather than MSMEs going for the RBI. And moreover, whatever government schemes are there, the government schemes will be implemented or the credit will be given for the MSMEs based on what transactions they are doing for the corporations in the TREDS platform. Linking government e-marketplace with the TREDS to encourage cheaper and quicker financing. Government e-marketplace is there for agriculture goods also. So wanted to link this platform. Whether all these will be achievable or not, we need to see. These are proposals of the budget. Really, by the time the government will implement, many things can change. Understand on that. Or some things might not be implemented also. Okay. So trade receivable as asset-backed securities to develop a secondary market. What is developing of secondary market here? These invoices can be used, and corporations are giving the guarantee that they will execute the money in the future. Based on that, the MSME can secure a loan from the government. Okay, and MSME can give this particular invoice for some other MSME if it doesn't want it to have the capital from the bank now. It don't require. Some other MSME can get the loan by taking this. So it wanted to develop a secondary market, like we are buying the shares from a particular investor, but in between what you wanted to do, you want to sell the share. For whom you will sell the share? For some other person who quote a better price. In the same way, government can give the loan, banks will give the loan based on particular invoices. But if MSME feel I don't require this amount of money, based on the invoices, MSMEs, whatever the money they get, they can give to some other MSMEs. It wanted to build a further mechanism on it. It wanted to make this entire system workable, and based on this, it wanted to create a secondary market. There is no scheme for it right now. This is just an idea to build on it. Okay, understood? Trade receivable, e-discounting system. And what it will do, it will enhance liquidity and settlement of transactions. How it will do, what are the details, who will participate, all these things, if a government introduce a new scheme for it, we will get to know. Futures and options, what are those? Those are also derivatives, right? It wanted to create further market on this. Next, government will facilitate corporate mitras, especially in tier 2, tier 3 cities, small cities. There will be corporate mitras who will benefit MSMEs. What they will try to do, make MSMEs meet requirements, follow labor laws, register on these kind of platforms, give them education. What are the government schemes like Mudra Yojana, how they can get the loans, give awareness. And what is a big problem is registration of MSMEs is not happening. We don't know how much growth is coming from, how much exports that these MSMEs are doing. We need to track that data, build that data, provide as much support as possible. Where this lack of things are happening in small cities, we don't know the data, how much MSMEs are there in order to help them. So this corporate mitras, what they try to do, they try to inculcate these people into the formal system. We wanted to increase formalization. Do you remember in the labor laws? We wanted to increase formalization so that we can give benefits for the people, we can collect taxes also. Okay. These are the M1 exchange invoice mart. These are two of the 3 TRED platforms, government recognized platforms, where these corporations, banks and the MSMEs come and they do the transactions, invoices. So this is the MSME classification you need to know. Revised, we need to know micro enterprise. What is the basic investment it need to have to be recognized as a micro enterprise? 2.5 crore. Turnover need to be 10 crore. Small enterprises, the revised is 25 and turnover is 100. It It is a present one. 125 crore investment need to be there to be recognized as medium enterprise, and the turnover of this medium enterprise need to be 500. Just remember this. You can be you need to use this in the mains exam also, especially in the mains exam. You need to quote it. Like micro will have 2.5 crore as investment, 10 crore as a turnover, then it will be qualified as a micro enterprise. Okay, got it? 2500, 125, 500. Before, these are the limits, now they are revised. Investment and turnover, based on that we will classify enterprises based on investment and turnover. Okay. Then Biopharma Shakti and new National Institute of Pharmaceutical Education and Research will be created. 3 new pharmaceutical education research institutions will be created. There are 7 existing institutions. We will discuss them. What is this Biopharma Shakti? We need to discuss. Biomedical technology is increasing. Diseases are growing, especially the non-communicable diseases. And a lot of our medicines are coming from synthetic or chemicals. These are the chemical medicines that we are using. And there are normal medicines which are manufactured by pharma companies. And India is a generic capital, we know. It means based on the same formula, which is a chemical. One second. Which is the chemical. The Indian government, the Indian pharmaceutical industry will try to build on the original drugs, which are called as generic medicines, where the effect is same. Active pharmaceutical ingredient is also same, but these are the cheap drugs. They are not coming from the drugs which are originally manufactured by bigger companies. There will be lot of generic companies which will try to manufacture the same. The active ingredient might be the same, but the other material used might be different. Okay, and we are sending a lot of medicines to the third world countries. Here what happens is, rather than creating medicines out of formula drugs or based on the chemicals, what we will try to do is, we will develop a drug using a ingredient or using some proteins from the living organisms, which are called as biologics. Why we already have a lot of drugs and medicines for almost all diseases. These are not effective, especially new diseases are increasing, like the diseases like cancer is increasing. There are new hormonal related diseases that are coming for the people. Diabetes is increasing, TB. These are new kind of diseases that are growing more. And moreover, people are doing new therapies like hormonal therapies, people are doing stem cell therapies, people are doing. For all these, if there needs to be effective medicine, that need to be coming from the living organism rather than some chemicals which are artificially manufactured in the lab. Okay, so this is what biologics means. So government wanted to increase this biologics in the world that is happening in order to treat variety of diseases like cancer. Okay, there are lot of genetic diseases also. There are autoimmune diseases. New kind of diseases are evolving. For all these complex diseases, biologics are seen as alternative to the normal medicine that we have. Not traditional medicine. Traditional medicine means what? Ayurveda, which we have. Unani, homeopathy, Siddha, regarding that also budget discusses. But if we develop these one second. See this biopharma mission. Normal medicines are made from chemicals, small simple molecules, easy to replicate. What are replicas? Generics, right? Generic medicines at a cheaper cost, like paracetamol. The active ingredient is paracetamol. Paracetamol can be put in some Dolo or some other paracetamol, aceclofenac. But active ingredient is paracetamol here. In the biologics, entire medicine is made from living systems. small microorganisms. Just like vaccine, what is vaccine? It consists of living organism which is modified or which is dead, which will develop immunity. What we are trying to do is develop a medicine from the proteins of living organism, just like a vaccine. Instead of liquid, what will go? A tablet will go into your body, which is called as biologic. Okay, and when we try to produce it at a mass level, when we try to replicate this living organism through genetic engineering and tissue culture, when we produce it as mass quantity, that will become a biosimilar, just like a generic medicine. Biosimilar will come from biologics. Okay, so it's a large complex molecule, but it is very difficult to replicate. Insulin, vaccines. So we wanted to develop this. The mission is called Biopharma Shakti. 10,000 crore is allocated for over the 5 years, develop India as a global biopharma manufacturing hub. Establishing under this, there is new pharmaceutical education research entities, and we wanted to upgrade the existing ones also. Clinical trials network, we need to create labs, we need to create which will do the clinical trials. Strengthening the Central Drug Standard Control Organization. We need to remember what is CDSCO. Drug Control Organization, that is. We wanted to strengthen that framework also. It is present in the budget. The details of further will come in the future regarding Biopharma Shakti. But what you need to remember, what is the difference between biologics and normal medicines? Biosimilars are the replicas of biologics, just like generic medicines to the normal medicines. Bioeconomy is growing basically. Biotechnology is also growing. What is biotechnology? When we use technology in order to modify the living organisms and to treat diseases, or we try to invent new things, or do the genetic engineering of living organisms for doing the agriculture, or if we wanted to develop some genetically modified organisms, GMO crops, new kind of seeds. Biotechnology is used, right? Technology where the living organisms are modified is called as biotechnology. There is Department of Biotechnology under Ministry of Science and Technology, right? So India's bioeconomy has grown in the last decade, and it is targeting $300 billion by 2030, and it contributes 4.2% to the national GDP. And India's bioeconomy is powered by 4 key sectors: bio-industrial, pharma, bio-agriculture, bio-research. In every sector, there needs to be research, education, or whatever sector you take, there should be research. Semiconductors, AI. That is why India AI mission is there, in order to do the research regarding how AI will be utilized in all the sectors. So pharmaceutical, lot of GDP generates, employment gets created here. Industries, where the medicines are manufactured, where the powders, chemicals, industrial chemicals which are taken from the living organisms, bio-industries, bio-agriculture, seeds, crops. What seeds have? They are done the bioengineering that happens. There will be modified seeds. Seeds are also the organism, right, that grow. Lot of seeds are spurious seeds in the agriculture. We wanted to encourage good quality of seeds. We wanted we have national seed bank, gene banks we have for the crops, which consists of living material. We wanted to store that material for future, because lot of famines are there, lot of water stress crops are there. We wanted to make our crops the drought resistant, climate disaster resistant. There are a lot of climate risk. So how we are going to do this? Tissue culture, genetic engineering, combining 2 different crops or 2 different seeds and making it, altering its genes and making it more resistant towards all the stresses. Okay. Department of Pharmaceuticals, Ministry of Chemicals and Fertilizers. They function under this Pharmaceutical Education Research function under Department of Pharmaceuticals, Ministry of Chemicals and Fertilizers. Overall, the biotechnology comes under Ministry of Science and Technology, but Pharmaceutical Education Research, this comes under Department of Pharmaceuticals, Ministry of Chemicals and Fertilizers. These are institutes that are there. Already 7 existing, we wanted to modernize and create 3 new ones. They are India's premier institutions for drug development, biotechnology, clinical research and regulatory science. Okay. Location might not be asked, but have a we can't say. There are many facts which are asked in the exam regarding IITs, IIT Kharagpur. These are being asked. So see this. IIT of Pharmacy is called as the center is Mohali, NIPR, National Institute of Pharmaceutical Education Research. We did discuss this. Okay, this is finished. Then we have India Semiconductor Mission. In order to encourage the manufacturing of chips, semiconductors, chips are used in almost all electronic goods. We don't want to import material from countries like Taiwan. We don't want to get material from countries like China, Hong Kong. This is where South Korea. India Semiconductor 2.0. To be launched to produce equipment and material, full stack Indian IP, it means from manufacturing to modification to assembling that chips. And chips are used in almost all. It is used in even the weapons also. It is used in the defense sector also. So we wanted to secure our supply chains. We wanted to increase exports also. And for that we need to have research and training centers. Under this ISM, there will be new technology labs will be created, industrial labs will be created for the research. Electronic Components Manufacturing Scheme, which is other scheme which has 40,000 crore which is allocated in the budget. Under this electronic components manufacturing scheme, lot of electronic components come from rare earth minerals. This rare earth metals are there in countries like India and many countries also. But what is difficulty is extraction is difficult. So China has built that technology. We did not build the technology. That's why we are importing, and we wanted to build that technology. They are not rare because they are available on the basis of availability. They are rare because it is difficult to extract them. That is why they are rare. But it consists of lot of lanthanides, dysprosium, tritium. There are many rare earth. And there is a difference between rare earth and critical minerals. Critical minerals means for critical technology, whatever are the material used, they are called as critical minerals. Okay, because based on the importance of certain minerals, we call them as critical minerals. Rare earth means extraction is difficult. We wanted to put rare earth corridors in 4 states where already there is infrastructure for mining. In these states, infrastructure is there, and these are good mining states, and there is availability of rare earths here, and we have monazite sands also, and mostly these rare earths will be available in the monazite sands. So Orissa, Kerala, Andhra Pradesh and Tamil Nadu, this is where we wanted to develop rare earth corridors. And government will launch a scheme to support states in establishing 3 dedicated chemical parks. There will be chemical parks based on plug and play model. What is plug and play model? Plug and play model means government will secure the land, government will provide every infrastructure, construction of a particular industrial house, providing water facilities, basic facilities for the people to live there, industrial quarters. Every infrastructure is created already set up. What you need to do is just set up your unit and start manufacturing from there. That is what is plug and play model. You don't need to put any clearances. You just pay the rent, do your business, promote the exports, or do certain manufacturing, which is called as plug and play model. You don't need to go for every ministry, take the permission. All the permissions will be taken. Come, show your authenticity, like what you are going to manufacture, where you are getting money from, whether you have loan, how much funds do you have in your bank account, pay the rent, and do all the business. That is what is plug and play model. Okay. So the India Semiconductor Mission is a major government program to build a complete semiconductor and display ecosystem, chip design and fabrication, to testing, packaging, supply chain development, and to make India a global hub for electronics. The core vision is to make semiconductors, display design and manufacturing ecosystem within India. It aims to develop a long-term strategy for developing semiconductor and display manufacturing, solar technology, the screens that we use, all these are coming from other countries. How we will manufacture this, skill development is necessary. So we wanted to create supply chains also, not just domestic manufacturing, we wanted to export also. So chip design, research and development, and there will be lot of startups who are coming with the tech idea, they will be given some support. Government can give support as a venture capital fund. What is venture capital? So whatever the suppose you have some capital, 50%, the other 50% you want to secure loan, government will invest. That is venture capital fund. Attract domestic and foreign investment. Government will try to will provide a way for FDI also come and flow into the sector. Enable India to manufacture more technology, advanced chips and display locally rather than import. So self-reliance in the critical technology, that is where the semiconductor mission is, and we want to extend it in this year also for the long term. Already this exists. Next we have textiles. I told you it is labor intensive sector, and there are already schemes called as National Fiber Scheme. Government is trying to promote self-reliance in silk, wool, jute, man-made and new age fibers, and people who are working with these fibers will get the loans, bank loans, and there will be funds allocated to this. There will be textile parks. There is PM Mitra scheme for the textile park. For that also government will give more funds in order to develop those textile parks in other areas also. There are 7 textile parks that are there in southern states. There will be more textile parks that will be set up, and manufacturing units can be put up in that textile parks. People can manufacture directly, send them as the exports. There will be duty exemption, tax exemptions for them. This is how the government will try to give incentives and promote manufacturing. Okay. Then handloom and handicraft, because handlooms also play an important role, especially in the small villages. There will be a lot of handloom sector, traditional handloom sector, tribals will be involved. Lot of rural employment will be involved in the handloom. For them also, there will be support for weavers and artisans. There can be schemes that will be put up in future. For them, there can be funds will be released, like we have PM Kisan. There are many states that give funds for artisans whenever there is unemployment or loss, especially for women artisans. Okay, that act as an incentive for them, where they can invest and do the activity. Summer 2.0, this is already there. It is to provide skilling, textile skilling. In every district there will be textile skilling units. People will be trained in how to sew a cloth. Like there will people will be trained, especially women will be trained in manufacturing of a cloth or a material, where employment will be generated and people can be used. Like demographic dividend will be useful. Challenge mode mega textile parks. There will be more parks created and existing parks will be run to a full potential. Then there is more importance given to Gram Swaraj initiative, where Khadi handloom and one district, one product. It means there is one district, one product scheme. It means every district need to export something, right? That is one district, one product scheme. Okay. So even in under this, in every district, what is a textile that is mostly manufactured, that will be given more importance, and every district need to choose a particular thing. They try to increase the manufacturing, provide the employment, and moreover they need to export to other countries also. Rural youth engagement. So these are some of the textile related schemes. So here clusters means what? Pockets of textile manufacturing will be created. Machinery will be given to that enterprises at a subsidized rate. Suppose if a textile industry or a company wanted to buy the machines, there will be less interest on the bank loans, like that. Testing and certification centers. So many of the exports, if these textile industries wanted to send as exports, there need to be some certification. There need to be testing, because most of the countries, they don't import, saying that labor regulations are not followed, quality is not there, which material is not authenticated. So proper testing will be done before sending the exports in order to like quality control. Based on the quality, the other countries will not try to object or will not try to cancel the order. There is no chance for the other country to decline the exports that we are sending to them. Okay. Why these countries do that? In order to discourage the exports, because exports create what? They create competition to the domestic industry. They try to create lot of regulations. Now we have free trade agreements. Generally, if we are trying to send exports, there are many conditions that are imposed on the exporters, like they need to follow proper if it is food material, proper phytosanitary measures, how the crop is cultivated. Suppose if you are sending basmati rice, what kind of seeds you are using, how much labor is used, whether you are using the child labor. Based on that also, there will be lot of restrictions. So testing labs and certification centers, if it is properly certified, the material that we are exporting, then there is no chance for the other country or customs to reject it. Okay, so they can easily pass that, and they can get the money by exporting. Okay, this is PM Mitra scheme. It's a textile hub that brings every step of textile, from weaving, cotton to weaving, then yarn making, then cloth making. From cloth, you need to cut the cloth and make different fabrics. That is when you will sell, right? There will be different steps and processes that will be there. And this all dyeing, printing, all these things will come under text. Everything you can do from A to Z here. Each park covers a larger area, 1,000 acres or more. So it can be either green field or brown field. There are many textile units. Suppose if you go to a particular district, there will be a cluster of area where these kind of activities will be going on. That can be taken up as a a textile park. Having said that, they have huge area. Area need to be there. If it is very less area, we can't tell it as a mega textile park, right? So it can be brown field or green field. Green field means what? You are setting up freshly from land to a creation of units or different industries coming up in a textile park. You might know what is SEZ, Special Economic Zone. It is just like that. Brown field means what? Already it might be existing, but you will name it as mega textile parks by adding some more area, more capital, including more units into the picture. Brown field means already existing. Green field means a new textile. Freshly, land will be taken by the government, a new textile park will be created, which is called as green field. Okay. The scheme is inspired by the vision of farm to fiber, where the cotton is coming from the farm only. Okay, factory to fashion to foreign. It means we will export. Domestic consumption plus also export. 4 Fs. Farm to fiber, factory to fashion, and to the foreign. Aims to make Indian textiles cheaper, faster, market and higher quality. The ministry is Ministry of Textiles. There are 7 approved parks already existing: Tamil Nadu, Telangana, Gujarat, Karnataka, Madhya Pradesh, Uttar Pradesh and Maharashtra. The Ministry of Textiles will provide financial assistance for these parks to be set up. 800 crores per park for greenfield, 500 crore per park. For the state, the fund will be given. State need to utilize that fund in order to acquire the land and allocate the land for the textile companies or units or factories. They can come set up their business in the park. 500 crores will be given by the Ministry of Textiles wherever the park is set up to the particular state to implement that. Okay. The governments will provide land. The state governments, who will provide? State governments will take the money, provide the land and also create infrastructure. Okay. And generally whatever the exports are coming from this, there will be no duty. You don't need to pay, and there will be more incentives also for that industries. If you are part of textile, if that factory is in the textile park. Okay. So creation of employment, promotion of exports is a basic idea with regarding textiles, because it is labor intensive. We did discuss all this. Capital goods and infrastructure equipment, high-tech tool rooms for public sector enterprises to set up digitally enabled automated facilities, focus on design manufacturing. So for capital goods and infrastructure equipment also, government will provide the support. Construction and infrastructure equipment scheme, big construction equipment, tunneling, boring, which create infrastructure like big buildings. For that, huge investment and huge technologies are required. Government will try to bring schemes in these areas also. Okay, whoever want to acquire the mission, they can acquire those missions at a subsidized rate or take the bank loans in these sectors. So basically government is trying to say we will not only provide incentives to other sector, for capital goods also we will try to provide loans or incentives so that you can acquire capital goods and infrastructure, create businesses. Container manufacturing. Container means ship containers. Container manufacturing in India is very less. We are not talking about defense, we are talking about normal containers, normal ships where goods are exported, imported, taken to different states, inland waterways. Container manufacturing is less, so we wanted to, container means ship container. So we wanted to encourage that manufacturing. Most of the ships that we manufacture somewhere else, people of India who want to operate that ships will operate here by buying elsewhere. So we wanted to manufacture on our own, which will, the government allocated 10,000 crore over 5 years. Globally competitive container. We are not talking about small ships, big container ships. We are focusing on port infrastructure also, port modernization, right? Inland waterways, Sagarmala project. Remember, the ports modernization, especially there is a terminal which has been opened in 2025. Do you remember that? No, in Kerala. Visinjam port. That is important for 2025. So we are focusing on manufacturing of big containers also. We wanted to be global. Ships.
Not containers.
Ships and the infrastructure which is used in the port. Big containers that carry goods also in the ports. Reduce logistic imports. These are logistics. We want to reduce that imports. The big containers or ships or terminal fleet which is utilized in the ports, we wanted to do domestic manufacturing. Support export infrastructure. Try to export. First, reduce import if possible. Let us export also. But it is very low. Manufacturing is very low in India. That container and ships manufacturing, we wanted to increase that. Electronic component, which we have already discussed this. We have discussed this also. Okay. Before this electronic components manufacturing, there is allocation of 23,000 crore. It has been increased to 40,000 crore in this budget. Okay. Chemical sector strengthening. We'll create 3 new chemical parks, cluster-based plug and play model. Plug and play model I have already told you. We are importing lot of form of what? Fertilizers, right? lot of ammonia, nitrate, fertilizers we are importing, potassium. So we wanted to reduce that fertilizer imports also, which is increasing our cost. Domestic manufacturing need to be strengthened, which will reduce the cost for the farmer at the end of the day. Sports good manufacturing initiatives, sports goods design also need to be encouraged, so that sports will be affordable for the people, because sports is growing. We are encouraging people to play the sports, so we can't levy more taxes on exports, because we are importing more. Sorry, taxes on imports we are levying. So domestic manufacturing is encouraged. Sports good we are importing from other countries, we wanted to domestically manufacture. Next comes agriculture. Manufacturing is over. Infrastructure we will see. Rejuvenate low yielding. So we wanted to create commercial agriculture. What is commercial agriculture? Cashew, coconut, sandalwood, these kind of niche crops will be encouraged rather than the crops like paddy, food crops. Commercial crop cultivation is the stressed one here in the budget, like walnuts, where there is more revenue that can be generated. It means we need to diversify our agriculture, right? Most of the crops which we try to cultivate is paddy and maize or sugarcane. Paddy, wheat, maize or sugarcane. So we already discussed about pulses in the previous budgets and economic survey. Pulses and millets are focused. Now we wanted to focus on these horticulture crops. Coconut promotion scheme to increase production and enhance productivity. Indian cashews and cocoa programs will be there in this financial year. Ministry of Agriculture can implement those schemes. Details of the schemes will come later, but these are the focus areas for us. Dedicated program for horticulture, animal husbandry and supporting high value. This is what is high value agriculture. Cashew, sandalwood, cocoa, these are the things. So in the animal husbandry, because we need to double the farmers' income, we are saying we need to increase their returns. So what we need to do? Livestock farming we need to encourage. We need to encourage mixed farming. Mixed farming means what? There will be agriculture plus also livestock rearing. Okay. So support entrepreneurship in the sector to facilitate job creation in the rural and semi-urban areas. Loan linked capital subsidy for support of veterinary and para-vet. There will be colleges also. See, unless there is some research that is done in the bovine and breeding culture, we need to have goats, we need to have cattle, sheeps. That is where basically the revenue will come, whether it is a women SHGs or men. Men don't generally part as farmers will be part of organization, producer organization. But SHGs, when we talk about, it is just women, right? Women form SHGs. And for them, if we need to create income in the rural areas, they need to be given the livestock, or otherwise they need to participate in the formal businesses. So they can be formed as an SHG and they can contribute by taking the livestock. Livestock will be given for them for livestock rearing, like at a very less rate. Who will give the livestock? They don't need to buy from somewhere. Breed the population. There will be colleges for that. Whenever there will be some diseases, these colleges or infrastructure, hospitals, they will try to reduce that diseases, help the women, entrepreneurs, livestock entrepreneurs, whether it can be women or men. It means apart from agriculture, they'll get some income by selling what? Milk, by selling some wool from the livestock. Okay, got it? Hospitals and breeding facilities in the private sector can be created. Even private sectors, if they want to enter into this, they can be getting loan linked capital subsidy. How much ever loan you are taking, in that subsidy will be given. Subsidy means what? Not less interest rate. On some part, suppose if you are taking 50 lakh, on 10 lakh you don't need to pay interest. That is what is capital subsidy. Loan linked capital subsidy. These kind of schemes are already there, but government will try to promote it more. Okay. Focused cultivation on post-harvesting infrastructure, backward and forward linkages, like warehouses, storehouses, cold storage facilities in order to increase the shelf life of the agriculture produce. Sandalwood is one more thing, and there is Bharat Vistar. What is this? Bharat Vistar is an open-ended platform. Everyone can contribute to the resources, like from which state which crops are growing on, how many farmers are there, what are the relevant type of agriculture data, how many different types of soils are there. Under all the ministries' data will be called Ministry of Chemicals and Fertilizers. What it will do, how much fertilizers are being used in every state. That data is also useful for the farmers. All the agriculture related data will be put under an open source platform. Everyone can access and can take a better decision. Farmers data, like how many farmers took the loans, the data will be coming from the Ministry of Finance. So it is an open-ended platform. Better, it is like collaboration of all different kinds of data with respect to agriculture. Agriculture is not just limited to Ministry of Agriculture. Ministry of Chemicals will come into picture. Ministry of Animal Husbandry will also come into picture. All these things, if it is there at the one platform, better schemes will come in the future. We can get to know where the resources are going on, how to allocate resources. That is what the platform is. Okay. Bharat Vistar is the agri stack. Stack means what? Different kinds of data from start to end. All data will be integrated. Okay. Fisheries is even the ICAR. ICAR, what incentives, what research reports, Indian Council of Agriculture Research, their better agriculture practices in all the states will be noted. We can scale up to other states also by documenting it. Okay. Then fisheries, integrated development of 500 reservoirs. It is inland fisheries, all the fisher individuals, like fisherman individuals will be tried to form fish producer organizations in order to get better market price for them. Okay, and they wanted to strengthen Amrut Sarovars, that are inland fishing need to be strengthened. Strengthening of fisheries value chain, like creating cold storage infrastructure again for them in the coastal areas especially, that is where the fisher states are. Enabling market linkages, how to integrate it with market, how to supply it, whatever the produce they are getting, like from farm to industries, from then to consumers, right? In the same way, from people to retailers, who are the retailers in between. Retailers will get more profit in between, just like agriculture good. Farmers will not get more profit because there are a lot of traders, retailers. Consumers also will not get profit in the agriculture economy. We have seen agriculture problems. In the same way, there are problems here also. So, creating supply chains, creating better income source for the fisherman is the objective. So create cold storage infrastructure, try to create producer organization where they can quote better price for the retailers, and that fish produce will be taken to either processing units or hotels which will do some final product with the fishes or sell at a better price in the mandis for the people to consume. Got it? Understood? Dedicated program for Indian cashews and cocoa, we have already discussed. Boost engagement, relevance by aligning training with employee roles. Okay. Integrated development, okay, we have discussed. Something is mismatching here, I'll give in the PDF, but basic idea is same. So apart from this, there is some other 2 pages in the budget document. You don't need to worry about that. There are very niche details. What are the niche details? Exemption of income tax for so and so goods, exemptions or duty-free imports for processing seafood products, 1%, 2%. Don't need to. You don't need to read this. It's very sector-specific tax allocations or tax deductions. You don't need to. But basically, outline of data is there is simplification of GST slab to lower prices for different sectors. There is faceless and automated government clearances for almost all the sectors to reduce the delays. customs duty exemption for goods like seafood, leather goods, and seafood processing, leather goods. If there is exports from this sector, there will be elimination of duties on raw materials imported. We want to export something, but in order to do that export, we are importing in between some intermediary product. For that, there will be customs duty exemption. Don't need to go into the specific details. Only details that we need to know regarding taxes is we have seen initially: buyback of shares, STTs. If you remember that, enough. Don't need to go into the details of this all. Extension, 6 months to 1 year. These are there in the budget document. This also. Exemption from basic custom duty on raw material, aircraft parts. Just read, don't need to remember. Okay. So it will be there in the PDF link uploaded under the video. Just see. Don't by heart also. Financial sector. Let us come to financial sector. Setting up of high-level committee on banking for Vikasit Bharat to align with India's next growth phase. Banking sector need to be proper. We have worked so hard from the last 10 years, especially 8 years, to reduce the NPAs, non-performing assets in the banking, where people don't take the loans, don't pay the loans, and there are a lot of bank mergers that have happened, and we wanted to utilize that for the fullest potential. And there is more effect on the banking system, because a lot of people, even the corporates, depends on the banking sector in order to take the loans. Not very big corporates. They either go for global finance, or they try to sell the bonds and the shares. Bond market is limited to only the bigger famous investors, famous companies like Zomato, Swiggy, which are listed. There are many businesses which don't go for the market, primary market or secondary market. From where they get the money, they go for the banks. So we need to develop some corporate bond market. That is the idea. Who will develop the corporate bond market? There is no entity till now. There will be some entity who will try to list some companies, their growth, their profit, and people can try to invest in small companies also, not just big companies for the profit. If people are investing, why they will invest their savings? They will invest their savings in the fixed deposits. But why they are investing in the stock market or elsewhere is to get some more earning on their income. But that is only happening especially with respect to secondary market or the big companies which are there in the primary market. But rather than that, it is not happening. That is why many companies like MSME is falling on the banks for the loans. So where what is happening here? Crowding out effect is happening. It means people are competing for the bank loans. Companies are also competing for the bank loans. That is why interest rates are also increasing, like repo rates and all. So we need to develop a independent corporate bond market within India. So we will discuss certain things. Especially we wanted to create local governance also. Like we wanted to improve local services in the rural areas, urban areas like municipalities. There are some municipalities like Pune, Hyderabad, bigger municipalities like Tier 3, where they are trying to float municipal bonds because they need to create infrastructure, right? They need to provide solid waste management in the cities, towns. They need to create better solid waste like roads. For this, the municipalities will go for the state government in order to get the funds, or either they depend on the finance commission grants. Rather than that, they can't take the money from anyone. But if they want to provide better services, municipalities can collect fees from the people, yes or no? Yes, they can do. They can get the revenue also, but mostly for funds. We might be seeing in the polity that they don't get the funds. States, governments don't believe them, etc. So there will be market that will be encouraged. Municipalities can create a bond market. They can try to give the bonds for the people up to 100 crore. Till 100 crore they can give. Now government is doing that. More than 100 crore, if a municipality is trying to create a bond market, municipality will float the bonds. You, me, and will buy the bonds, give the money for the municipality in the expectation of return, right? Understood? But Suppose if I subscribe to the municipal bond, I need to wait for the time period, but in between I got some usage. I can't rely on the municipality to give me return on that bond. What I can try to do, if I need to have the money, I just have a bond because I invested in the municipal bond. My money is locked in between. So many people, what they do, they don't invest in the municipal bonds. It means though we are trying to give municipal bonds, or some municipalities like Pune, Maharashtra, in Maharashtra and Hyderabad are trying to float the bonds, they're not getting money. That is the reason why what government wanted to do is develop secondary market on it. Suppose I subscribe to the municipal bond. What I can do is I can take this bond. There will be some entity who will create a market for that bond. That entity will be saying, Priyanka have so and so bond. If you want to buy this bond, you will get this much return. If you are ready, please come to our office. There will be some advertisement. What you will go, you have some extra money. You don't want to invest in the stocks, or you don't want to invest in the banks as a fixed deposit. What you can go to that entity. And what you will do is, you will subscribe to my bond. I'll not give you our bond. It means I'm not selling the bond. But from now, whatever the returns you will get over a period of time, the extra profits or dividends, by paying some small amount of money to me, you will get all the returns. It means on the existing market, bond market, I'm not selling my entire bond to you. Whatever returns I can get in the future, that I am selling it to you, and you will give that short-term capital for me. It is a secondary bond market development within the municipal bonds. Understood? It is just like derivatives. Are you not seeing the similarity in different things? Trades also, it is like that only. Got it? And yes, credit guarantee, SME, we have credit guarantee trust. That is also building upon same kind of idea. This also is like that only. It is to popularize municipal bonds. All this idea is to popularize, make people habituated to municipal bonds, invest in the local panchayats, and also create better infrastructure, better money for the panchayats, because they are not getting the funds. They need to rely on finance commission grants or the state governments. How can they create infrastructure otherwise? Okay, got it? So issuance of municipal bonds, more than incentive of 100 crore will be given for the issuance of bonds worth more than 1000 crore. Bigger municipalities only will do it. In the tier 3 cities, bigger corporations, municipal corporations only can do it, and there will be. And the scheme is under Amrut scheme. There is already Amrut scheme that is existing. You can go into the details of Amrut scheme. Right now we are not discussing that. Restructuring of Power Finance Corporation and Rural Electric Corporation. Power Finance Corporation is regarding how the discoms will get the money, etc. There is a central organization. Rural Electrification Corporation is to electrify rural areas. Government wanted to try to merge it. The recommendation is there previously, but government wanted to merge both of these entities now. So see how PFC is formed and how REC is formed. We'll give in the PDF later. This static details, better know that. Comprehensive review of Foreign Exchange Management Act. Lot of volatility is happening in the FDI and FII, foreign exchange management, in the year 25 to 26, 22 billion rupees. Whoever invested, they took the investment money very suddenly. That will already create a lot of volatility in the value of rupee also, if dollars go in the market. So what are the potential pitfalls where the people want to take the investment suddenly? Why people are not believing in the market? What are the errors that we are doing? How to manage it better? For that, there will be a high level committee to review entire what is foreign exchange. When we bought this Foreign Exchange Management Act after 1991. Before there used to be Foreign Exchange Regulation Act. Now there is Management Act. So how to encourage this FDI, FII investors more? How to create a long-term sustainable rules for them? Because sudden change in the rules always happen in India. Sudden change in the tax rules can happen in India. So that's why many of the investors, they don't they think more while investing in India, and suddenly they take back. So comprehensive review need to happen. That for that there is this non-debt instruments means what? Shares, equities. That is introduction of market making framework and what total return swap on corporate bonds. This is what I have told you. There will be one institution that will be created, and that institution will put who are the people who have bonds with them. How many? Suppose I am subscribing to corporate bonds or municipal bonds. I will quote that I have this many bonds. I took from the company. I invested so and so amount in the company. Now I wanted to sell. I'll go to some entity. Government will create the entity. Right now name is not created. Future we will get to know. And this entity will quote, this many bonds are there. These are corporate bonds. These are municipal bonds. This so and so person wanted to sell this many bonds. And it will create the data of buyers. You want to buy. Your 4 people list will be given that you are the buyers. I want to sell at a fixed price. So a market entity will be created who will popularize further buying and selling of the bonds. The primary investor will be the same. My bond will be changing hands. I am the person who will get the dividend at the end. Now, if I am selling the bond to you in the secondary market, you will get the return. Understood? Return swap means what? As I have told you, I will not sell the bond entirely. Whatever return I will get on the bond, I am the sole owner of the bond. At the end of the term, I will get the proper fixed amount. But whatever the returns or profits I am getting, you can subscribe to that returns. That is what is called as return swap. Creating market on already existing market. It is to popularize same. What it does is, it will create money flow again. If I want money, short-term money. Bond is for fixed time period. It is not like a share. Understood? I can sell the share. If I don't like, I can buy the shares whenever I want from some other company. Bond is different. You need to wait for a fixed amount of time. But rather than doing that, what if I get some money from you and I share my profits with you, which is called as return swap. And who will do that? There will be market making institution. Market making institution will be created. Who will quote the sellers? Who will quote the buyers who have already had the hold of the bonds from different companies. Companies will not be part. Whoever have bonds with like on which company bonds I have, there will be a list. Interested people can come. They can quote their prices and there will be secondary market that will be created. Got it? This already we have seen. Security transaction tax. Okay. Infrastructure will be created. There will be investment trust. There will be a real estate investment trust, national infrastructure fund, and several initiatives will be created in tier 2 and tier 3 cities with the population over 5 lakh. And how much capital expenditure government wants to do? In 2014, the capital expenditure is 2 lakh only, 2.4 lakh crore. Now the capital expenditure increased to 12.2 lakh crore in infrastructure, logistics, creation of roads. Suppose central public sector enterprises have empty land. Lot of enterprises, lot of government companies have empty lands with them. Nothing doing. They are just lying there. Give that land to an entity who will develop some project on that land. Sell, like create some businesses. Create some not textile parks, small industrial units. Give that land for the rent. Businesses will be created, right? So land development through what? Increasing the real estate. There will be investment trust in between. That investment trust need to have certain money, attract people, take money from the people, and entities will be created. Investment trust or real estate investment trust, what they create is, they try to develop a market for the land and they provide services by taking the money. People will not build the projects because they have thousands of crore. What they will say, give some money for me first, I'll develop some project for you like a home and I'll give it to you. You can live there for 100 years like that. Understood? These are other things. Already the time is one. We'll end it soon. Setting up of infrastructure risk guarantee fund. There is infrastructure risk guarantee fund to provide partial credit guarantees to lenders. Who will give money for bigger projects? Banks will give. Yes, if I wanted to develop some highway, state highway, national highway, bigger projects, bigger infrastructure projects, private people want to construct some malls, public-private partnerships, where the money will come for the private people? Banks. But suppose there is some delay in the project. They took the loan. They need to pay the loan. But government is not giving clearance. Suppose people are doing some dharnas, we don't want this project. Project delay will happen, but you need to pay the loan. So people who want to invest in infrastructure are not investing because of all these uncertainties. Though I took bank loan, India is very difficult place to do monetization, to do the business. So I want some shelter for me. Who will provide that shelter? There will be some infrastructure risk guarantee entity who will shield me if I get a loss for a shorter amount of time, unforeseen. It is not in the business to create that loss, but some unforeseen circumstance has come where investor will feel the burden and the loss because of Indian laws or people in India. Infrastructure is not going, I need to pay the loan for the market, I am getting the loss. So in order to create certainty in the business, to shield up, to encourage people to invest in the public-private partnership, this risk guarantee fund is created, which will be managed by the government only. Whoever are the investors, if they feel the loss, they can go to that fund, take the money from that fund if they feel the loss. It will basically encourage that I am there for you. You invest, take the loan, invest. If something happen, we will take care of you. We created a fund. Next, recycling of real estate assets. As I have told you, through CPSEs, Central Public Sector Enterprises have lot of land. Let us develop that land and create businesses. There will be money generated. Then dedicated freight corridors that are there. Industrial dedicated freight corridors for what? Logistics, raw material, exports, from from manufacturing of goods to selling of goods, dedicated industrial clusters, industrial corridors, infrastructure corridors, all these are part in order to create infrastructure. So there are two places that are mentioned, Surat in the west, Dankuni in the east. New corridors will be created. Operationalizing new infrastructure, new national waterways in the mineral rich areas. Setting up of ship repair ecosystem. Coastal cargo promotion scheme. Increasing the share of inland waterways and coastal shipping from 6% to 12%. This you need to remember. This kind of data, small data, you need to remember. 6% to 12%, we wanted to increase the cargo promotion. Then launching of seaplane viability gap funding scheme. As I have told you, viability gap funding means government will give the funding if there is a funding pause. If you want to construct some sea ships or terminals, that viability gap funding will be taken care of the government, do the manufacturing. 2 lakh crore support to the state under this tourism in order to encourage the tourism in the sustainable promotion of state tourism scheme, that is. So 2 lakh crore is support is given to the state in order to promote the tourist areas in the state. Already that scheme is existing. Okay. Special assistance to state tourism scheme, that is, please go through that. Then there is development of integrated East Coast corridor, especially in the Northeast. For the Northeast, there is integrated East Coast industrial corridor. We want to develop industrial corridors in the Northeast also. That is under Purvodaya. Okay. And we are about to end. And there is more focus towards carbon capture, utilization and storage. There is lot of engineered systems where there will be pollution that will be captured. There can be rainwater spraying in the air, or big turbines will be there, as we have seen in the Delhi. That infrastructure which will capture carbon, or we can capture carbon from the air and store it in the soil, store it in the ocean, that infrastructure need to be created, and we are giving focus towards climate. Okay. Exemption of BCD on basic customs duty on sodium antimonate for the use of manufacture of solar glass. Solar technology we are trying to promote, but we are importing lot of things in the solar glasses, solar chips. We are importing from other countries. There is duty on it. We will reduce the duty, but try to manufacture here. Okay. Exemption of BCD on import of capital goods required for the processing of critical minerals. You want to have some manufacturing equipment. Critical mineral, we are trying to encourage critical mineral and rare earth mineral. We wanted to process it. How you will process? With equipment and technology. I can't say do that also, do this also. Okay, import machines, but try to do critical mineral manufacturing or processing here. There will be exemption of basic customs duty. So there will be custom duty exemption for lithium ion cell battery that we are using in our phones. Okay, battery storage systems will be encouraged. Extension of existing basic customs duty on the imports of nuclear power projects. So we wanted to encourage nuclear power also until 2035, and we wanted to expand all nuclear plants. Whatever existing plants are there, major or minor nuclear plants, we wanted to encourage, like small modular nuclear reactors, more nuclear reactors. We are importing from other countries. The materials that we use, like uranium, in order to sustain the reactions, plutonium or thorium, for processing these materials also we need to have equipment. So in order to do that, we are importing. So there will be exemption of customs duty for that also. Exclusion of entire value of biogas in the central excise duty payable on biogas blended with CNG, natural gas. So there will be duty exemption for this biogas, variants of biogas like natural CNG, biomethane. For these plants also, whatever you are importing in this, there will be custom duty exemptions. See, this nuclear energy or solar, critical minerals, all these are what? Energy. Rather than importing fuel or fuel-based, coal-based, we are trying to create alternative energy, and we wanted to increase how much of renewable energy in India by 2030? 500 or 550? 500, right? 500 gigawatts of energy. In that, how much is solar energy? How much is nuclear energy? You need to know. Already we want 175 gigawatts of solar energy. How much we have achieved? This will be important for the prelims exam. Amplifying potential of cities to deliver economic power. There will be high-speed rail corridors in 7 cities. Between Mumbai to Pune, Pune to Hyderabad, it is uttered in the Parliament. Hyderabad to Bengaluru, Chennai to Bangalore, Delhi to Varanasi. These are high-speed growth corridors in the 7 different places. Environmentally sustainable passenger systems. Focus on Tier 2, Tier 3 and temple cities. So 7 high-speed rail corridors will be created under this budget. And from 1964, we are not separating the railway budget, or, sorry, that is economic survey. And there is no separate railway budget. Okay. So this is care economy for women and children. There will be she marts. People like women self-help groups can create the marts, like there are retail marts, right, where daily goods errands will be supplied, like Walmart, where goods will be sold. That kind of retail outlets can be set up by the she groups that are called as she marts. Bank loans will be given, subsidies in all the further details will come later. Then Divyangjan Kaushal Yojana, it is to create livelihood opportunities for differently abled people or specially abled people. Divyang Sahara Yojana, high quality assisted devices for eligible people. So artificial limbs for them who don't who needs the support of artificial prosthetics for them. There should be the quality and affordability of medical assistance for them, like prosthetic ears, like the hearing aids or the ramps in the industrial places. All these things will be taken care of Artificial Limbs Manufacturing Corporation to scale up production of these devices and giving them at a lesser rate. Strengthening of PM Divyasha Kendras as modern retail style centers, setting up of medical health. NIMHANS is already there in one center in the Bangalore. There will be two more help will be put in Ranchi and Tezpur. Establishing emergency and trauma care centers in the district hospitals. Road accidents, many people are dying globally and also in India. So in every district, hospitals. So this is where especially health has come here. Till now we didn't discuss. Strengthening of services sector, we will finish it, wind it up. High level committee will be created to see how services sector will be evolved, how AI will be utilized in the services sector, how people need to learn regarding AI, what kind of courses people need to do so that these educated people will be useful in the future. They'll be industrially skilled. Lot of industries, what they are complaining, the colleges in India, higher education in India is not useful. So that is why employability of Indian people is less and they are working for very less salaries. So everything regarding education to industry, employment and use of AI in the services sector, every whole report will be given, like we have seen education report, Kasturi Rangarajan report, Subramaniam report, like that report will be given. So that high level committee will be set up in order to see entire services sector from education to employment and also exports and future of services sector within India. Health and medical tourism, already we have discussed. 3 new Ayush centers will, establishing 3 new all India Ayush centers, testing labs for Ayush and promotion of Ayush medicine as exports. Traditional medicine demand is increasing. People are trying to buy Ayush medicines, going for natural medicine rather than that of chemicals. So Ayush exports, how to certify this Ayush? Because lot of Ayush medicines are coming from people who don't have a particular name. Traditional knowledge is not documented in India. So all these things, how to develop patents for this Ayurveda medicines, patent development, patent protection, all these are new kind of laws that need to be created in order to develop Ayush, okay? And this traditional ecosystem, traditional medical ecosystem within India. Understood this? Medical value tourism. We need to promote creator economy. Orange economy is called as creator economy. Visual effects, gaming, content creation. Labs will be created in 1500 schools, AVGC labs and 500 colleges. Content creation is a new economy. Lot of money is getting generated, $21 billion, somewhere around that. So future is orange economy. Many people can get employed. Lot of people, Indian people are doing content. They are getting some money from big global companies. Why not encourage that? That is the idea. So specialized institutions like IITs, IIMs will be created. National Institute of Design for Fashion Technology. Higher education, universities, township and every district will have a girls hostel in order to encourage education. Tourism, leveraging the Dharamshala declaration to develop India as a global tourism hub, especially the temple circuits, Buddhist tourist hubs. These are the focus areas for the tourism. Government income sources in descending order and ascending order. Where the government, already we did discuss this. Borrowings and other liabilities is highest. Income tax, corporation tax, GST. Before income tax, GST and then corporation tax. Question, there is a possibility of ascending order, descending order. Where the money is spending, state share of the tax, which government cannot avoid. Then interest payments, central sector schemes, defense, centrally sponsored schemes. First, interest payments, what we are doing, which is bad. Next, central sector scheme, then defense, then centrally sponsored schemes. Remember these facts, please. Okay, for the exam. For other exams also, these facts are important. In 1 rupee, what is the order of spending? Okay, where the money is coming from. Suppose government is getting 100 rupees, most of the money is coming from borrowings. It means we are taking it as a debt. Other, income tax. Next, corporates are paying the tax. Next, GST collections are coming. Got it?
Yes.
Okay. Yes, we have seen 10,000 guides will be there. They'll be skilled and trained, and there will be a platform created, like a tourism platform created. How many tourist sites are there? How to reach that tourist sites? What is the available material, source of information for that temple? Who constructed it? Where you can live? How to go? What are the railway network that is created? Suppose if you want to go to the place A to Z regarding that place, how to reach, what to see, where to live, everything will be known. That kind of website wanted to be developed. That is destination of digital knowledge. This website will be developed to encourage tourism sector. Many people, they'll search in different websites how to reach the particular location. What is that? Many people don't know. There are lot many hidden places in India. Lot of foreign tourism is increasing in India, and we are going out. Many people are coming to India. Better proper services need to be given to these people. That is a responsibility of government. So lot of states, lot of districts, whatever places need to be developed, that will be developed and well documented so that people can see, utilize that as a source. Okay, so 1,000 guides in order to like help them. There will be guide, tourist guide, right? For this kind of skilling will be given to the people. Employment can be generated in the tourist areas also. Development of niche and sustainable tourism, ecology, trail, like trekking, all this will be encouraged. That is a niche area where we don't focus on trekking, these kind of things. Only in Himalayan states trekking is there, but we will find out. Okay, then wildlife, bird watching, turtles, this is very not there. If you go foreign areas, people interest in the bird watching, etc. in other countries, but in India that is not encouraged. We can encourage and collect money here also. Buddhist circuits to promote tourism in northeastern region, focusing on Mahayana and Vajrayana sites, especially West Bengal. There is Vajrayana site. Northeast India will host first ever global big cat summit. Animals like there are 7 big cats, jaguar. There is big cat alliance in the environment, so India is hosting that also. We are promoting cheetah, tiger, jaguar, and leopard. There are other 2 or 3. So big cat alliance we are participating. So we wanted to promote protect wildlife also. So high level committees will be there for banking to propose reforms in every sector by 2047, and we wanted to encourage corporate and municipal bond markets and also rural electrification. Amrut is also, we wanted to make municipal corporations to raise more funds via bonds, and we wanted to promote urban development. That's it. This is the comprehensive review of the budget. We have finished the part 2 and part 1 of union budget. From tomorrow onwards, we will see the economic survey comprehensively for the mains exam. Thank you. Have any doubts? Any other doubts? No doubts as of now. Thanks for attending. I'll do the PDF, and also there will be other material regarding schemes that will be provided in the website. You can watch in the website, or it will be sent to your group. So utilize it for the prelims exam.